Hi everyone, today let's talk about Jerome Powell and the FOMC. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Just to get started here, the overall tone was a little bit more neutral than I would have expected. So we got a bunch of Fed members coming out after the last FOMC, jawboning a lot of hawkish talk, and Jerome didn't really parrot that same kind of talk. You can see he did get asked about hikes several times, and he said that it was unlikely, so that was good. We kind of knew that it was already unlikely, but there were rumors floating out there about a potential hike at some point in the future. They also said that they are going to smooth the shrinking of the balance sheet. They said that last time, but he reaffirmed it again here today. You can see a second question here about a potential rate hike. Again, he denied it, saying that it is unlikely currently, but that they are not gaining greater confidence in inflation data. The recent data has not been good, and that is why they are still not likely to cut, at least in the short term. They're still watching labor markets, though. He did say the labor market has been softening a little bit, but not terribly. The economy continues to stay strong, but he did mention the dual mandate. As the labor market is softening, he did mention it might be necessary to cut rates in order to support the labor market. At least that's what he was inferring, in my opinion. And he also mentioned that he didn't want to act too late, because these kind of interest rate moves do take a long time to affect the economy and markets. And if the economy and the job market is moving lower already, it could be potentially too late for cuts to be effective in supporting the economy. So overall, nothing really surprising here. No hikes coming, held at the same level, running off the balance sheet a little bit slower, so that should help markets a little bit. But overall, inflation is still too high. Moving over to fear and greed, we dipped down to a 40 here today. Says previous close was a 40. I think we were actually a little bit higher than that. You can see we were up at 44 just a couple of days ago, and now we're much lower. Looking at momentum, still neutral, pretty interesting. Strength, still extreme fear. Breadth, still regular fear. Put call ratio, still in neutral. And we can see we did get a little bit of a bounce here off of that 50 moving average here on volatility, but it is still in neutral. And then no change here for bonds. Bonds are still in extreme fear and extreme greed. Moving over to seasonality, May is a historically weak period, and so far it seems to be like we are going to get this initial dip. Typically around 1 to 2% to the downside is what we see, and then you can see a pretty clear double bottom style layout here before we see some bullishness into the start of June. Moving over to Fed futures, I just want to highlight the differences here. June staying the same, July still flat, and then looking out to September, this is where that first cut was, and now we're seeing the most likely cases that we are going to hold at those current levels. You can see the previous probability was actually higher at 54%, so it did drift down towards a potential cut for September, but this was the soonest. Now July is the highest probability where we do see that first cut. And looking at the probabilities, the first cut numbers did go up a little bit, and you can see those hold numbers did go down a little bit. So a little bit softer conditions here on the Fed futures than what we saw yesterday. Moving over to earnings, quite a lot of earnings here today. MasterCard, Qualcomm, Pfizer. MasterCard missing on revenue, but beating on the bottom line, quite a bit of that going on. CVS missed on both. That was not great for them. DoorDash losing more than expected. Nothing surprising there. Vici Properties also missing on the bottom line, beating on the top. eBay beating on both. Pretty interesting there. And then looking at tomorrow, don't forget, we do have Apple after hours. It's going to be massive, I'm sure. And then we have AMZN, ConocoPhillips tomorrow as well. And then looking at Friday, you do have Hershey's. Not a whole lot there. And then if you hold anything over the weekend, you do have Realty Income on Monday, Simon Property Group. So we're getting some of those real estate holdings kicking off next week, as well as Tyson Foods and Berkshire Hathaway. And then moving over to the economic calendar, ADPs came in higher than expected, so job market still strong. JOLTS openings did miss a little bit, though, by about 200 million. Previous number was revised up a little bit, so a bit of a mixed signal there. And then you can see FOMC came in as expected. And then looking at tomorrow, we'll see Fed balance sheet. We'll see how that runoff is playing out, like he mentioned in the comments. That's pretty much the only thing here for Thursday. And then looking at Friday, tons and tons of data here, jobs data, non-farm payrolls, hourly wages, year over year and month over month. And don't forget unemployment rate in there as well, and some economic data, ISM non-manufacturing PMI and prices. and non-manufacturing employment and global services PMI all coming out 9:45 and 10 o'clock. Moving over to max pain, this really did not move a whole lot. Total options still hovering around 1 million. Put call ratio still at 2. Max pain 507. Stock price 501. Put wall still at 500. Still expecting that to hold. Call wall here at 510. So in between there seems like what we're going to get for a finish. I think this could potentially drift towards that 510 level, closer to that max pain here as we push towards the end of the week. Remember, this is the end of the week. Options close, so we could still see some more volatility tomorrow and then a little bit of a rally here into this kind of dip low 507, 508 area for the end of the Friday session. Moving over to the charts, starting off with the S&Ps here, you can see that massive move that we had yesterday and then another massive move here today. So we fell right to the 500 level yesterday, tested that level pre-market and pretty much up until the session and pretty much up until the FOMC, and then we got a huge candle up, 1.27. And then we gave it all back right at the end of the session to close bearish on the day. 0.32 to the downside, not great. Still at that 500 level. You can see this fall down bear flag setting up. If this breaks down here, I think that's going to be quite bearish. Technically, you could argue that it has. We are below that level, but the 500 level is super critical. We talked about it on max pain. If that level holds, we could see another pushback up here into that 507 area, which would be right on top of max pain. Like we talked about, 507, 508 seems like a reasonable level. But momentum, still bearish. RSI, still bearish. But you can see after hours here today, we're catching a little bit of a bounce. Something to pay attention to. We'll see how that plays in pre-market tomorrow. But like I said, I think 507, 508 makes sense for the end of the week. And then moving over here to the Tasty charts, you can see bearish conditions on the daily chart. And this does look terrible right here. Down move, slight pullback, rejection off of that 34 EMA in the midline here. If this breaks down to that lowest ATR, that would be down around 47.80. And then you got the 144 EMA sitting down there at 484.80. So right now, on this setup on the daily chart based on the Tasty, this looks awful. So keep that in mind if you're looking for that bullish bounce that we talked about. I still think it's possible, but it's always important to look at multiple charts. This one does look quite bad. And then looking at the 4-hour chart, you can see still bearish conditions here, still at that lowest ATR, 498.88. That's your support, which is just about $1 or $2 lower. And that last candle of the day on the 4-hour does look a little bit bullish. Momentum hasn't rolled yet, so still being patient at that level. And then looking at the hourly chart, definitely mixed signals here. So you got that big wick high, took out the ATR stops to the upside, so you do have bullish conditions on the short time frame. ATR stop sitting at 499.14, so right in that 500 level like we talked about, just below these previous lows is support. And that's why I think we could see a push at least short term into that zone, even if the longer term charts do play out into a lower low. Moving over to the NASDAQ, very similar thesis, down move yesterday, flat line at that 421.08 level, bouncing a little bit higher after hours, wicked all the way up to almost 430. I think we did touch it just by a couple of pennies. High of the day, 430.14. So we did touch that level, rejected very strongly. Again, closing down 0.72, so quite bearish on the candle. But momentum, slightly bearish, but not by much. Volume ramping here, not good to the downside on the daily. But on that hourly, holding critical support, 421. Couple of candles up. If this holds again here tomorrow, that could be an opportunity. And still looking at that same kind of setup, move down, bear flag. Might get one more bounce here before that breaks down massive. Moving over to the Tasty charts, similar thesis, move down, bear flag, looks terrible, looks like it's about to fall off right to that 144 EMA down at 412.31, which would give you at least one more day of downside. Also have that lowest ATR there at 409, so does kind of look quite bearish on the daily chart, just like we saw on the SPY. Doesn't mean it can't bounce from there, but definitely something to pay attention to. And then looking at the 4-hour chart, still bearish conditions here, so we took out those ATR stops at 426.81 on this move down. Still haven't recovered that. Got very close to them here at 430.30. Remember the high of day for the NASDAQ was 430.14, so very close to that. Still got rejection from that zone. Bearish momentum, big volume on that selling. And then same as the SPY here on the hourly chart, you can see that hold. ATR support, 419.90, so you have short-term bullish conditions headed towards that 426 area in my opinion. Probably get at least one day of upside off of that move. Momentum not showing us much at all, so super short time frames, slightly bullish. Longer time frames, still ultimately bearish. Moving over to the Russell and the Dow. The Russell was up 41 cents on the day, 0.21. You can see it's actually drifting higher, about $1 after hours as well, so pretty interesting price action there. Definitely better than what we saw on the SPY and the NASDAQ. Similarly here on the Dow, 0.2%, drifting higher after hours. So seems like some buying is coming through. It's just not supporting the SPY and the NASDAQ in the same way. Resistance here, 198.75. And then here on the Dow, we did get above that one, 379.35 level. Next level would be 382.20. Moving over to stocks that moved, we got oil and gas on here for a second day, down 2.2%. This is a falling knife. Seems like it's headed to the 200 there at 143.15. Momentum bearish, RSI bearish, big volume on that selling, makes sense. And then looking at GRMN here, this is a new one. We haven't talked about GRMN pretty much ever on this channel, I think, but this has been on a massive run. You can see the October low here was down around $99 and it's run to 163. Huge run within this channel. We're right at resistance and it's going into earnings, but huge candle here today, 13.2%. And we'll see what happens at that resistance zone. Moving over to the Mag 7, you can see it was also down on the day, but it is also bouncing a little bit after hours. Momentum still bearish, still held that 333.21 level, down 0.77. So this is still driving the NASDAQ as you would expect. But like I said, it is bouncing a little bit after hours. Let's look at that on the shorter time frame here. So similar to what we saw on the other charts, dip low in the morning, held the level, bounced into the FOMC, gave it all back. But now we're starting to drift a little bit. Look at that volume. There is a little bit of volume resistance in here, 339, 338, right in that zone. But if we can break through that, then we might be headed back up into the 346 area and then potentially at resistance 349. And if that happens, markets are definitely going to be set to go a little bit higher there, maybe 1.5%. Moving over to Apple and Tesla, pretty much no change to the thesis here. Apple down 0.6, still in the same consolidation. Support's down at 165.70, still sitting on top of these trend lines. Momentum still rolling down. So no changes here, still looks a little bit bearish, but at support. And then Tesla testing the trend line here, 180.44, critical zone. If that breaks down, we're probably headed down to the next level, 167.34. But if this holds right here, then we could bounce right back to 188.40. So critical area, momentum rolling down, RSI rolling down, probably going to break if I had to guess. Moving over to Microsoft and Amazon, both of these managed to turn in a pretty good day actually, 1.44 and 2.29%. Microsoft getting back above that 394.22 level, momentum rolling up, RSI looking decent. We talked about the divergence here, and it does seem like this zone might hold, and then we could get a push back up to 413. If it does, that would be a nice little move there, about $20 a price. And then looking at Amazon, let me know down in the comment section if you want me to do a review of Amazon. I haven't done a longer term video of their charts in a while, but they did have earnings and it did look quite good. And then it was up 2.2%. Couldn't hold above that 181.41 level, but it is up a little bit more after hours. It is back on top of this trend line. Again, momentum rolling to bullish. Both of these have a decent structure and it does seem like they're probably headed a little bit higher tomorrow. Moving over to staples and discretionaries, even staples gapped lower here today, 0.64, broke the level there, 75.40. Right back into the middle of this range. We'll see if it breaks down to that 74 level. We talked about this being a double top. So far, that still continues to be true. And if this does culminate here and it takes out the midpoint, this is probably headed down to that 70.85 level at least. Momentum rolling to bearish, and you can see massive selling on that candle. It's down after hours. Looks super bearish here on staples. And then looking at discretionaries, similar thesis. Big sell on the day, 0.63, took out the level, more selling after hours. Momentum rolling to bearish, big volume. Everything looks bad here on discretionary. So both of these are risk off right now. And staples is not even outperforming. So when we see markets selling everything, that's usually a good time to get out. Moving over to breadth, you can see we did see bearish breadth, but we are still holding the level 36.60. If it's going to hold, it needs to do it here, but momentum rolling to bearish on both of these. They're probably headed a little bit lower. 50-day also headed to that 32.22 level, but if it does touch that, you should expect the 20-day to move a little bit further, potentially all the way down to the 16, and then we could hold a higher low there, and if that happens, then we are probably going to push back up to the 86 area. So right now, short-term bearish, looking for a higher low, and then a potential push up, and I think that fits here on both of these charts. Moving over to the dollar, you can see we got a massive turnaround, so we've been watching this as a bull flag. Move higher, bull flag, potential breakout out there on Tuesday, and then we gave it all back here on Wednesday, and we're back into the middle of the range. So interesting rejection, waiting to see what happens here. If this structurally breaks to the downside, that could be a little bit bullish for equities. Right now, momentum and RSI are both bearish, but we're holding at support 105.50, still holding in there as a critical zone. Structurally, still bullish, but that's a strong rejection, and it'll be interesting to see how this plays. Is this support going to break, or are we just testing it one more time before we head higher? Moving over to yields, you can see we are still in the same trading range. We tried to break out just like we saw on the dollar on the 2-year, but we're right back into the middle of the range. Momentum bearish, RSI bearish, so still bullish structure, some bearish indicators. And then looking at the 10-year, pretty much the same thesis. We didn't try to wick the high or anything. We're still in the same consolidation. Momentum RSI bearish, but structurally still looking at an uptrend. So we'll see how it plays out. But right now, neutral, potentially set for a little bit more bearishness. Moving over to bonds, J&K wicked all the way down here to 92.85. Still closed bearish on the day, but not that much. Big volume there as well. If it's going to hold a higher low, it really needs to do it here. 144 EMA sitting at 93.11. Critical zone here. If this breaks back above these levels here, then we should see a push back up to that 94.82 level or potentially even higher. And if that starts to break, that should give us a little bit of a leading indicator of markets going higher. TLT, on the other hand, still a dumpster fire. It is in that same consolidation, inverse to what we're seeing on the 20-year. But right now, structurally a downtrend, holding in this consolidation. Moving over to the VIX and the MOVE Index. MOVE Index cratering, so that's indicating a little bit of bullishness potentially, especially on bonds. Momentum and RSI breaking down, seems to be gaining speed to the downside. VIX, on the other hand, continues to hang in this 1470 area. It's been ramping up slowly. We'll see how this looks after Apple earnings tomorrow. If Apple earnings come in okay and markets stabilize, I think this is probably going to dump back down to that 17 area, which should give markets a little bit more confidence to move higher. Moving over to my accounts, I absolutely crushed it here today. Did super well. $1,200 on the day, back almost to the 131,000 that I was at prior to the down move yesterday. Made a lot of money on the upside, and then markets moved lower, and I took all of those positions off and managed to make a little bit of money there. And then I left some positions on here that are a little bit bullish, so we'll see how that plays tomorrow as well. Still have a covered call at 432. If these shares continue to rally up back up to 432, which they are doing currently after hours, then I could still make a little bit of money there also. So moderately bullish as I have been. And then on the IWM, made some money there as well. Still sold a 195 for tomorrow. I had a put on and markets came crashing down, so I got out of that position and locked in some profits. And then I put a 195 on for tomorrow. Probably should have been a little bit more aggressive there. Could have sold a 196. And you can see it's already up to 197 for tomorrow. So we might see a little bit of a bounce in tomorrow's session, even if it's a little bit shorter lived based on what we saw on the daily charts. Let me know down in the comments section what you thought of the FOMC. Is it everything you thought it was going to be, or was he a little bit more dovish than you would have expected? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.